Yellow-faced warriors, everyone ready? Great attitude, Bob. Bob said, good morning. What a great week this is going to be. Plant those seeds, watch them manifest, Bob. Rooting for everyone in here. I want everyone in here to do well. Sometimes I'm happier when other people are making good trades that, kind of manifest from the coaching, the helping, the analysis here at ForexAnalytix. So let's get right to the markets and see what we could dig up. Dollar just a layup away from making new highs here. Weakness is still in the pound compared to the euro. I've been talking about for a while that I thought euro pound could perform, not because of euro strength, but because of pound weakness. And EG is still looking pretty constructive to me. Okay, now we're starting to threaten this 89.40 level. Here's your weekly. Breakout held. I'm glad Steve's back. I'm sure he'll talk about this. And we start clearing this resistance, I think 92, and I've been talking about a potential new high here to complete a 3 drive on the weekly. Okay, so dollar making new high, euro hasn't quite yet. I think it should. Here we are, euro. Not that far away. Here's your daily. So I would think that they want to go for these stops here at 115.08 before you get a turn. We will diverge down here. Okay, there'll be a non-confirmation on the daily at new lows in the euro. Nothing on the 4. 1 hour looks like it's holding the integrity. Maybe this is drive 2, 1, 2. So getting close to where we could get a reaction. I prefer the euro pound over it. Looking at US dollar yen, and this is something I do want to talk to Steve about, because we've been on the same page with yields, and there was a rising wedge that implied new highs in yields, but look what happened late last week. Could explain the yen weakness when you look at a daily on the 10-year yield chart. So we have this initial big break, attempt at 61.8, pull back for a higher low, and then another wave similar to this, not the same magnitude, where we only could get one close above 3, and we started to weaken Thursday, Friday. There is potential that we could fail from here. And if you get something like this, you're going to get maybe 265. But if you really look at something like this being, maybe this is a complex right shoulder happening in yields. Let's just put in a neckline for the halibut. Yeah, let's call it this. Oh, it didn't do it. Horizontal. Everyone kind of see what I'm looking at? Okay, this could be a descending triangle if we fail from here. And we break down 274. It's almost 0.4, this formation in yield. So 0.4 would give us 235, 240. So what could be behind it? My best guess is risk off, flight to quality. Blake and I were talking about last week when the bond yields were going up, gold was going down, the dollar was going up, and the stock indexes weren't really going anywhere, that there was kind of like nowhere to hide. But I think some money came in and we're buying bonds 10 years when they got above 3. So that's going to have implications for the yen. So the yen has not been really, the correlation hasn't worked well in stocks, or the opposite in gold. But, I was talking to some traders over the weekend, and it's very possible that we end up with a failed breakout here, back under 111, 109, especially if yields are going to fail here. This could have been the failing rally. Of course, we have to do some work on the downside to confirm it. But if that ends up being a correct count, even 265 yields, and that was a turning point last week in the bonds, I would say that the yen has 108 in it, which is also a level that Greg had talked about after we had the high 1330. He was on. I said, "Do you think we could sell it at 1220?" And he said 1180, and we got to 1215. So really, even if you didn't sell this, you didn't sell this, it's not late because it really hasn't even broken down yet. So you're still anticipating it. On the 1 hour, we're right back here to resistance. You have some decent areas you could use risk management with. I prefer at least over this high and look for spots on the short side again. Marcel read. Okay, he had to log back in. Let's see, what else? The NASDAQ, Russell's really been the weak sister, but NASDAQ with this big recovery is just a shade over 61.8. So it's much weaker than the S&P. It's just missed new recovery highs. They were at, I think, 46 up here. What was this high? 46.90. So we didn't quite do it. But look, here you have almost 100% retrace in the S&Ps, right? I don't have the fibs drawn here, but I'd say this is on the Dow, it's probably 88%. Whereas, and something else Steve said, avoid tech. So if they ever find a worm in the apple, I don't think Amazon's going to hold it up. So NASDAQ just flirting a little bit above the 61.8 here. So maybe that might be what's behind a drop in yields down the road. The other last sector I want to cover are precious metals. That rally that we had Friday in gold and silver may have been just a tremor, kind of a market tell of what the metals may have in them when we finally get a turn. And, gold rallied Friday with the dollar up, right? And it's not making new lows with the dollar almost making a new high. Similar situation in silver. I just have a feeling that between now and mid-month, maybe a week from now, that some type of low is going to be, I've been talking about it for a while because of the CLT setup. So I'm not sure if we have to wait for Tuesday or we get the reversal here today, but I'd like to see one more shot down in the gold, the psychological level under 1200. I'd like to see that give way, and then we'll check and see where our RSIs are. Any questions on anything I've covered here so far today? I give you enough to chew on and think about going into this week? Because I agree with Bob Brewer. What a great week this is going to be. Who else agrees with me? Give me a why. Okay, I'll leave that for Steve. Okay, Mark, look, a lot of people are looking forward to a great attitude. We don't want to go into the markets and say, oh man, I hope this one works. Right? Right, Mark? We want to go into the market and say, hey, I've done my work. I have confluence here. These are my reasons. These are my contingencies. Go ahead, Mr. Market. Try and prove me wrong. Okay? That's a warrior mentality. Not, I hope this one works. If you're hearing that thought in your head, time to close your account for a few weeks and go see the psychiatrist. I'm actually a trading psychiatrist if you're interested. Not that I don't need one either. But with that being said, we're at full strength this week. I have an excellent interview with Eric at Art Trading 125 today. I think he mainly trades equities, but he's got a great life story. I think that a lot of you will relate to it. He went into the hole pretty big he went into the hole pretty big through trading, and now he's got the life he dreamed of. He didn't give up. So I'd like to hear how he was able to hold himself up, or what held him up during those hard times, and how he had the spirit not to give up and still have faith that he could do it. So stick around for that interview. And let me say hello to Blake. Blake, this heat is oppressive. I'm very tired of summer.
Me too, Dale. I have to admit, it's getting a little old here, and on the West Coast. So how you doing today?
Good, buddy.
Good.
Ready to go.
What's that?
Ready to go.
Ready to go. Well, it is. It's obviously we're in the summer, and in August. The August month for trading is of the months. It is the worst. What I've experienced. It's just the worst month of trading. This is the month that many Europeans take off, many Americans take off, and it's not as much in the United States as it used to be, because so many of our kids are going back to school early. Like my kids start school this week, and it's 110 out. Yeah, but my kids
used to be after Labor Day.
Yeah, it used to be after Labor Day, but in the United States, for a lot of, and a lot of Europeans don't know this, or have recently found out that a lot of Americans, they've shortened their summer months and extended some breaks throughout the course of the year to make the time away from their desks, or from learning, a lot less through the summer, so it takes them less time to get reacclimated to what they had learned, the previous year. So it's actually, I think it's a better system. It's just a little bit different. So a lot of our, like my kids have been off for 2 months, and they're heading back to school already. So their summer break is a little bit shorter than like mine used to be 3 months, and us as growing up, it used to be that way.
Oh, the endless summers, Blake.
Endless summers, yeah. So, so anyway, now as far as the August trading, though, it's still pretty characteristic of slow months, or a slow month of trading. And the euro dollar has slipped to getting close to 115 in these lows. Now, I have to say that I had a pattern in play for the euro dollar, and I closed that out today. And I closed out a long U.S. dollar Mexican peso as well, because the dollar has kind of extended itself, and you know, those of you that follow me on Twitter probably just saw that I posted this chart on the 4-hour dollar index that we're up at the top of the wedge. I'm really concerned more about the dollar and the daily sentiment index that came in at 90 on Friday, and so with the dollar up at these levels, you got to be a little nervous, with the dollar. That doesn't mean the dollar can't go up from here. I think you have to be a little bit more careful, and take some profits when you got them. We could get a break higher in the dollar index, but take out the stops maybe first, huh, Blake? What's that?
We haven't taken out the stops yet. I'm not saying we have to. I'm just saying that the algos know that they're there above 62.
Yeah, they probably do, but once again, if this is really pretty key resistance, we might not even be able to do that, because we've already taken out the stops here once. Already. So I'm
well,
thinking
you had nice divergence on that euro chart you showed just before the dollar chart. This new low is not confirming that you showed. I forgot the time frame. Well, it was a shorter term time frame.
This is the 4-hour. Maybe you're talking about the hourly.
Yeah. See that? Pretty glaring.
It is. So I think you have to be, like I said, you have to be a little careful. Now, the flip side of that is, the stock market's trading a little heavier. So, you know, how does the dollar react to stocks? I'm not too sure, but like I said, at this point, if you go long, let's say you go long the euro, and I'm not saying that that's the right trade, but if you go long the euro, you know where your risk is at this point, right? Like if you're not looking at the euro like I am, so let's say you're looking at the euro like this, and let me just put up a different chart here, and let's clean this up.
Stell
Okay.
wants to talk about the BOE when you wrap it up.
Oh, okay. Well, I'm gonna let him speak in just a second. But let's say you're looking at the euro like this. Okay. Oops, shoot, I didn't mean to do that. Let's say you're looking at the euro like this. Dang it. Okay. You're looking at the euro, something like that. You know, perhaps we're in a situation where people are like, well, you know, if I buy the euro, I know where my risk is. It's August. I want to get long. I'll just get long right here, and I'll put in my stops below, you know, 115. And I think that's, you know, that's I don't know if that's the right trade. I'm just saying that anybody who's thinking long, that's what their you know, the risk reward is at this point. So anyway, that's why I think you just have to be a little careful. Now, gold actually just hit new lows. Precious metals are still under pressure, and you mentioned something about that, Dale. But we hit a big confluence late last week, actually on Friday, and gold, you know, really spiked up to 1220. We're back down to 1208 already. So
Yeah.
You know, maybe gold will be the catalyst that drives or leads the you know, continued dollar strength. But Stelios wanted to talk about the Bank of England. So Stelios, are you here?
I am indeed. Hello, everybody.
Hey, so Stelios, good morning and welcome back. Now, the Bank of England met last week, and you thought that their commentary was fairly bullish at the statement. Is that correct?
Well, it's you know, I'll tell you my immediate reaction, then I'll tell you what I thought after having thought about it a little bit. I was on a beach actually when it happened, so I couldn't really follow everything. But when they hiked rates, I mean, the market had been pricing a good chance of them hiking rates like 80 to 85%. I thought it was justified. They hiked, but then we saw the split, which was actually not a split. It was 9-0 unanimous. And that initially, I thought, wow, this is a very bullish sign. You know, if everybody is in line with this. The previous meeting, remember, it was 7-2 to hold. So, you know, first thing I thought was, wow, this is pretty bullish. And then obviously Carney started talking, and he showed that their forecasts, the inflation forecasts, were a little bit lower. He basically said something which was very puzzling for me. He said that more hikes are going to be needed. So they hiked 25, more hikes are going to be needed. I thought, wow, this is bullish. And then they outlined the forecast, and it's like one hike in 1.5 years, and then another hike after another year. It was like almost no hike. You know, 2 hikes in 3 years is practically saying we're hiking now and we're stopping. You know, roughly. You know, it's not really a hiking cycle. So with the market, when they saw that, it's you know, initially the pound strengthened, and then it just got slammed because they hiked. It was 9-0, but the forecast for it is really not great. And then I thought about the split, the unanimous decision, and I thought, you know, from 7-2, I thought they were going to hike, but it was probably going to be marginal, you know, 5-4, 6-3, 7-2 maybe, and then you see them all being unanimous. And then, you know, I thought about it, and I thought, you know, this is wrong. You know, you have doves in the Bank of England, like Ramsden and Cunliffe. And, you know, I thought they were never going to switch so quickly. You know, you had other hawks like Saunders and McCafferty who have been voting for a few meetings now to hike. But I always thought it was going to be a split the other way. And then you know, this happened, and I'm thinking, what is this? You know, Mark Carney says we're going to hike, and then everybody goes, oh, yes, Mark. You know, it just sounded very weird to me. It's supposed to be, you know, 9 individuals with their own opinions, and suddenly they just all jumped to the same opinion as Carney. So that I was a bit disappointed by that. But even though I am bullish the pound, and I was bullish the pound, and I want them to hike, it was a bit weird looking at that. Anyway, so that happened, and then the pound has been on the back foot since then. And the interesting thing, which we had then on Sunday, yesterday, was Trade Secretary Liam Fox, who said a no-deal Brexit is probably a 60% chance event, which I thought that was quite punchy. And surprisingly, the market today, okay, the pound is a little bit, is retreating a little bit, but cable is down because the dollar is strengthening. The pound is underperforming a little bit, like euro pound is up 0.3%.
Well, yeah, I mean, the cable's down 75 pips and the euro's only down 28. So,
yeah,
I mean,
yeah.
even though the pound has a little bit bigger ATR, it is underperforming.
Yes, it is underperforming, but I think we just got a good idea of what the market thought the probability of a no-deal Brexit was, which is probably 50-50. So Liam Fox comes out and he says it's 60-40, so the pound underperforms a little bit. So this is our base case scenario now, that the most likely result, if Trade Secretary is saying this, he knows, he has a good idea of what's happening. This is our base case scenario, that the most likely outcome is a no-deal Brexit. I personally, I will stand by what I've said before. I still think that there is going to be a solution. Both sides are kind of throwing arrows at the moment, and UK, Liam Fox said that probably also to show the EU, people that they're not messing around. They're not going to just take a back foot here and take whatever the EU dictates. So I think that there's going to be a more toing and froing, but eventually there has to be a solution. There has to be some kind of agreement, even if it's not a great agreement for either side. There has to be something, because it's just too big an economy for both sides to have a no-deal Brexit. Interestingly, also we had this morning, one of the EU officials, I cannot remember who it was, said that the EU might actually soften their stance on the Irish border issue, which has been one of the big issues with the UK. So it looks like the EU is taking a tiny little step back. So, I'm taking all this while trying to look at the big picture, and I still think we're in the middle of negotiations, which we actually are. They're still negotiating. So both sides are trying their best to not show their hand, but to show that they are in a position of power. They have good arguments either way, and I do think that in the end we're gonna see some kind of agreement happening. Now, in terms of the pound itself, actually, let me take.
What we are doing is, in regards to the cable, we're getting close to the big 618 retracement that comes in at 128.50, which is, and that's from the post-Brexit low all the way to the highs that we set back, when we did this double top. So, the highs were back in April. Can you believe from April we've gone from 143 to 129? Yeah,
that's been a big move.
It's been a very big move, and we're approaching the big 618 retracement, which comes in at 128.50. So we've fallen really dramatically, pretty quickly.
Yeah, I think we have to
few 4 months.
Yeah, I think we have to once again look at what the market is pricing. What are we pricing for the UK? We're pricing very few hikes now. I mean, it's almost a flat path going forward. We're pricing a bigger chance than 50-50 for a no-deal Brexit. We're pricing all sorts of, political uncertainty. Theresa May doesn't have much support. She's in a very difficult situation. We're pricing all that in. All that has to happen. Meanwhile, the Fed will continue hiking twice more this year, twice next year, and who knows what's going to happen afterwards. It's all, as far as I'm concerned, and the same with the euro. The euro also, we're pricing that they're going to start hiking after, okay, it's a year away, but it's a year away, and that there's not going to be any black swan event. All these things happening in Europe, with Italy, with Spain, with Greece, which is not fixed. I'll repeat it again. So all these things make me feel, I still like being long sterling. I've been looking. Let me just share my screen for 1 second.
Yeah, sure thing.
And I'll give it back to you.
Still, you know why the EU is going a little lighter on the border issue with Ireland?
Why?
One word, Guinness.
Guinness. Yeah. The black stuff, like.
They want access to Guinness. So okay, go ahead.
Yeah.
Go ahead, buddy.
So I've been talking about this in the chat room quite a bit about euro sterling, and I've been following what you've been saying, Dale, and you're right. You know, this is my euro sterling chart, and I had, you know, 2 or 3 scenarios here on how I thought it was going to pan out. You know, we'd been on a descending channel. I thought we might find some, you know, a resistance there and pull down. We didn't. We've gone straight up. You know, we're getting to another level, which is about 90 and a half. I've been talking about that in the chat room with the guys quite a bit. I will look to go short around 90 or 90 and a half. There is a chance it might still go and try to take out those highs, which were what, late 2017, around 92 and a bit. But I really do think that this euro sterling should be going lower. Primarily because, as I said before, what's being priced in. And we have to remember, it's going to be one big headline that comes up when, I think it will happen, when the, you know, the 2 sides actually say, yes, okay, we're you know, finding an agreement and we're going to build on this, and then it's just going to keep going south, I think. So that's, you know, that's my view on euro sterling, and I remain bullish the pound. I don't have any positions right now, but I really want to sell euro sterling if it gets above 90. And I also want to buy sterling Kiwi. I've been saying this for some time. If it gets again near 190, 189, 190, that's a really great zone to get long, and it's getting there slowly now.
Good
so those
stuff.
were my thoughts on the MPC and the UK. I was very puzzled, you know, by the whole thing, but I remain constructive and see what happens going forward.
Good to be
Awesome.
puzzled on a beautiful beach. That's good to be puzzled. That's all I could say.
It was nice.
Right, Blake?
That's right. Oh, it sounds like Steve is here. Good morning, Steve.
Good morning, guys. I have a question
Yes,
for Stelio. Stelio, is there
Yes.
a single, as far as you know, is there a single government through future budget projections or a single central bank at the moment, at least from the main ones, that are projecting a recession in you know, the foreseeable future? Because, you know, I'm looking at these kind of plans like, you know, we're going to keep hiking like for 2-3 years slowly, or we're going to start hiking like in a year from now, or et cetera, et cetera. And, you know, we are just a few months away from tying up with the longest expansion we ever had in history. So I'm wondering, you know, even statistically speaking, is there anybody that is actually projecting some kind of a recession in the future, or, you know, according to all of them, we have abolished the business cycle and there are not going to be any recessions anymore in the future?
I have one answer. I have one answer. Paul, I think it was the Fed meeting before this or some press conference, said that they would be through with quantitative tightening by the end of 2019. So that could be kind of a subtle message of, you know, they're not going to be able to do it past then. So maybe that's what he's saying, is we might be in a recession by then. And they'll
So
be done tightening.
Paul thinks that the Fed will have unwinded $4 trillion of excess liquidity by then.
He didn't say that they were going to, you know, whether or not they would complete it. He just said that they should be through with okay, they're going to stop. He believes they'll be stopping quantitative tightening by the end of next year.
But without mentioning what is the target of quantitative tightening.
No mention of that.
Oh, okay.
But Steve, you're right. You know, if you see the forecast of central banks, it's always a hockey stick. You know, it always goes higher. So yes, you're absolutely right. You know, I don't think any central bank is going to forecast a recession. Oh yeah, we're going to hike, but then we're going to start cutting because X, Y, Z. So yeah, it's you're right.
Hey, Steve, I want to welcome you back, and I actually just passed you the charts because I'm going to have to step out. But welcome home.
Thank you, mate. Thank you.
Hope you had a great week away.
Oh yeah, it was needed.
I know the only person who missed you was Dale. Just kidding. We all missed you. So Dale specifically missed you.
I didn't have any. I couldn't get any confirmations on anything.
Yeah, and he said he missed his long strolls on the beach, holding your hand type of talks that you guys had all the time.
They were beautiful and special. So Steve, you know what, I'm curious, I know you're going to cover the board, but I want to, I'm interested in what your view is on the treasuries because of what happened late last week when you were in paradise. If you think that we had that rising wedge, which turned us negative, and we broke down, and I don't know, you know, it looks like we might have tried a turn here late last week, and maybe
we might have, but I have a horizontal support resistance area here, you know,
right here. Okay.
a little bit below 120. So the 50 DMA is also there. So you know, there's always a chance that we're going to see another push to the upside because this might be like still might prove to be like an ABC of some kind. So I can't, you know, I can't exclude that probability.
Okay.
But as long as we remain below this horizontal resistance area, I would really not jump the gun. I mean, I would want to see a lot more than what we've seen so far, because what we've had so far was an inside day. Yeah, sure, inside days, I mean, can happen at any given point. I mean, it's just a simple consolidation candle, and like a white candle, you know, showing some kind of a continuation to what can be interpreted as the market stalling a little bit. Okay. So, you know, for me to call this a bottom just after like an indecision candle and just like a bullish day, I think it's really jumping the gun.
Okay, yeah, buddy.
Very.
See what I mean? I miss my confirmation guy. He keeps me in control. Thank you, Steve.
Thank you. Now, having to do with the bonds, because you know they're somewhat correlated. Obviously, there is absolutely no question the treasuries have been underperforming by a lot of the bonds. Testament to that is the fact that after a very big bull market, a very big bull run, you can see it here in the bond market, instead of completely breaking down as like the treasuries have done, and you know have been producing some legs of that are very bearish. The bonds have just been consolidating in a downsloping like large triangle. So obviously, you know, the two of them, despite both of them being like the benchmark bonds for two of the biggest economies. I mean, one is by far the biggest and stronger economy in the Eurozone. The other one, of course, the US is on its own, like the steam engine of the world economy. You know, besides having, of course, this huge similarity, as I said, the bonds have been overperforming. They seem to be in a larger consolidation instead of, you know, having broken down. But still, we can see this reaction higher to the bonds as well. The bonds got actually rejected from a very, very nice area. So, you know, we had talked about this possible rejection, and we do see this rebound you're talking about manifesting in the bonds as well. But since I'm also viewing this rebound in the bonds probably as short-lived, because unless I see this larger triangle breaking to the upside, I would still think that being bearish, the closer we are to resistance, or being bullish, the closer we get to support, is the way to go, right? So I'm taking also that into account a little bit when, you know, assessing the possible path for the treasuries. Now, having said that, I just want to add a couple of things in the markets that Blake and Celius already talked about, and then we can talk about other markets. Blake already talked, and you know, this was a target that we had. Blake already talked about, you know, the next downside target being 128.50. As you see, you know, this is an area that is actually that we actually find multiple supports confluencing. I mean, it's the 161.8% extension of this move. It's there is a descending channel I'm monitoring here. It's the channel's support. It's also the 61.8. You know, from the post Brexit low to the recent highs. So multiple areas of support. I think that, you know, the closer we get to that, the more dangerous it becomes trying to short that late in the move. So, you know, I'm not constructive in any kind of way, but that doesn't change the fact that I would definitely, you know, not advise somebody to be selling at this point in time. Now, although I was away for a week, there are a few markets that haven't changed at all, so I'm going to go over them like very quickly. One of them is the Aussie. Aussie is still trapped in a triangle, more or less a symmetrical triangle, I would call it, almost a symmetrical triangle. You know, support remains very clearly this 73.2 cent area. As long as we remain below 75, I think that expecting this to break in the direction of the trend, which is lower, makes sense. And the exact same situation with the Kiwi. Kiwi actually testing now an ascending trend line support, but most importantly for me, we have a descending trend line support, and we also have the previous low at 66.90. I think that you know, a confirmation that it's actually breaking lower from here will then target a confluence of supports at 65 cents. I do think we're going to actually make it there. It feels very heavy. So as I said, with the Aussie, the exact same thing applies with the Kiwi, meaning since we came in those consolidations after a move to the downside, you know, breaking through in the same direction, I mean, to the downside makes sense, and you know, it's a higher probability scenario. So I think that Aussie and Kiwi have remained range bound, but you know, they should be making a move sooner rather than later. Another market that actually hasn't changed while I was away is Crude. Crude is still oscillating here. You know, the more it fails to resume higher, the more I believe that it's not done correcting lower. My eyes are still focused on the confluence of supports at $66. I think this level might act as a magnet, and we should see it getting hit before anything else happens. Gold, the only bullish scenario I have with gold, because I said even before I left that, listen, you know, any attempt of a rebound has been failing. We never managed to get 2 consecutive days of upside, and that tells a lot about a market that's beaten down. So I was, you know, I was quite clear that I believed that, you know, the next move is also to the downside. And, you know, indeed it has been moving to the downside. It's currently testing confluence of supports. The only bullish scenario I see here is this possibility, because, you know, it's not confirmed yet, of a descending wedge, right? But yet, we also have some Rsi divergence, but not a very reliable one, because each of the readings has been below the oversold level of 30. So as I said, there are some signs of a possible reversal, but in my opinion, they're not enough. They need some kind of a confirmation. What would that confirmation be? Some big reversal candle with a lot of volume behind it before I start taking more notice and, you know, giving more credibility to such an interpretation. Until or unless that happens, I have to keep looking lower. If we do break below this confluence of support, which is a little bit above 1200, like one of them is like, one of the supports is 1202, the other one is 1206. I think that below that we have to be looking for the horizontal support area at 1190. And you know, we've broken below this ascending trend line support. I really don't have like much to talk about it having to do with gold and silver. They remain bearish until proven otherwise. Silver, an equivalent situation. I mean, this looked to me when I left like a bearish, a bear flag. It might have ended up being a triangle, likely. You know, depends on how you want to draw it, and you know, we're not 100% sure that it's over yet. But you know, regardless, this didn't look bullish. I mean, this looked like another consolidation in a bearish trend. As I said, perhaps it's already broken. Perhaps this was it, this triangle. So we might see some follow through to the downside as well. Next target is the 78.6 from the flash crash low to the highs, which comes at 1483. So not much has changed here. And even if we have a look at the rest of the metals, Platinum seems to be consolidating. Looks like a triangle as well. It's extremely bearish. I mean, it has failed to produce any actionable pattern that could prove to be a reversal. Copper has failed. It's still below the, still above the previous lows, but it seems to be failing. I was hoping that, you know, good thing I had taken like profits on half of my long, and the other half was actually stopped at break even while I was on vacations. And, you know, I was hoping that the other half would actually make it to my second target, which was at 294. But, you know, it seems to be very heavy. And I remind you that the ultimate target of that double top that we had here remains at 256. So I do think that, you know, copper, especially if it breaks below this area, should be headed towards 256 to actually fulfill the target of this larger formation, this double top formation, and this range, which was from 294 to 330 roughly. Okay, so metals remain on the back foot at the same time, and I know that Blake showed that and I have nothing to add, so I'm just going to briefly show it. You know, there were two interpretations having to do with this formation. One of them is that this was a symmetrical triangle. The other one is that this is a flat top triangle, right? So it depends on how you want to draw the upper line. In any case, even if that last one is the correct interpretation, it means that we haven't broken above this formation, but we're currently testing its resistance. In any case, I think that either one or the other, both of them are continuation patterns. So in any case, I would expect another push to the upside. We had been saying that for some time. So I do think that another move higher towards 96.50, even the 61.8 from the 2017 early days high to the lows, which comes at 97.87, is likely. So for the time being, dollar seems to be well bid, and you know, we don't yet have some kind of a reversal signal, so we have to keep respecting that. Now, obviously, we've seen how important to this market is and remains this currency pair. I think it's instrumental. It has been lately moving the vast majority of the instruments we've been following. This is the USD Chinese yuan. It remains very, very strong. It does display some kind of Rsi divergence. So, you know, I was expecting, and, you know, it still might be the case that it could pull back towards this 670, 672 area of support before actually resuming to the upside. But, you know, it has remained so strong that, you know, we have to keep respecting the upside. That's it. I mean, there's nothing more to say here. And, you know, compare the manner and the speed with which the USD Chinese yuan depreciated starting in the very beginning of 2017 from almost 7 down to 623, 624, and the speed with which it has already retraced the vast majority of those losses, right? I mean, we've already retraced like 85% of those losses in a fraction of the time. So, you know, that on its own tells me that the chances of eventually seeing new highs are extremely high. Equivalently, we've seen the US dollar overperforming many other exotic currencies. One that I currently have in my radar is the USD ruble. Why? Because it has been clearly in a symmetrical triangle after creating a bottoming pattern. You can see it here. I mean, it was a prolonged bottoming pattern with a double bottom, right? And then we got like an impulsive move higher, then a prolonged consolidation, and we keep testing this triangle's resistance over and over again. My intuition tells me that you know, there's a good chance that sooner rather than later this is going to break to the upside and produce at least one more leg higher. We were monitoring since early days also this break higher in the US dollar against the Singaporean dollar. As you see, it has currently been creating a formation quite equivalent to what the DXY has been doing. And as I said there, looks like another push to the upside is, the most probable scenario. I don't have much to say about. Let me first go to the USD-ZAR. USD-ZAR seems to be breaking above a pennant, so that tells me that there is a good chance that there is more upside coming. As you see, even if you have a look at the profile of the RSI, it looks like perhaps a period of a corrective move or a consolidation is likely over. I see it breaking higher. So I wouldn't be surprised if I saw another push to the upside towards 1440. Needless to say, and I keep warning about it, the USD Turkish lira is completely broken. I mean, we were monitoring this as a triangle. I was warning over and over again, don't try to fade the strength of this currency pair. Turkey is still in dire problems, and I'm afraid, seeing the central bank give up on the fight of defending the 5 level, which is obviously a very strong psychological level as well. Obviously, they've already given up on the fight on holding this area. I really think there is more upside coming, right? I'm also afraid that the Turkish economy is sooner rather than later going to be getting to the point of no return. I mean, I believe that perhaps a combination of measures that will have to be structural, fiscal, monetary, obviously. I mean, Erdogan has to let the Turkish central bank hike rates a lot more. He doesn't want to do that because he thinks that's going to slow the economy, but he's completely mistaken. In what sense? That a collapsing currency is by far the worst thing you can do to your economy, right? So I do think that as long as Erdogan is actually standing in the way and not letting them do what has to be done, this situation is just going to reach a point that it's not going to be fixable, or at least it's not going to be fixable without making huge reforms and a very big effort, which also going to have negative consequences. So I do think that the USD Turkish lira is going to keep appreciating. Bottom line, we will have, of course, some attempts, to intervene, to hike again, whatever. But as long as they stay as they remain behind the curve, I think that any kind of a pullback is going to be temporary in nature. So let me go through the indexes first. Obviously, we had another great reaction from the 2790 area. I mean, this candle that we had on Thursday is an outside white candle, so quite a bullish signal here. We had multiple times indicated that 2790 was the key level for bears to actually break through in order for them to have the ability to actually reverse the course that the S&P has been into since actually the beginning of April. We had said the exact same thing about 2690 some time ago when we were actually trading within this range. Bulls obviously managed to hold this very nicely, and as I've said, I wouldn't like being long for multiple reasons. There is absolutely no question the US stock markets are extremely expensive. I think that in retrospect, in some months, a year, or whatever from now, it's going to appear like a huge mistake for somebody to be trying to buy up here. But on the other hand, I can't be short as long as each support area that we break manages to hold afterwards like a champ. And it's a slow process, but we still keep grinding higher, right? I do see a lot of divergences, as I've said, but I can't advocate in being short yet. So it is what it is. Nasdaq held these ascending wedges support very nicely. So as long as this holds, there is actually no signal. I mean, we drew this potential path to a breakdown a long time ago, and actually the market followed this almost perfectly, but what is now missing is actually the breakdown part, right? I need to remind you that there is a nice confluence of resistances roughly at 7,570. So we might push higher towards that area, or even, you know, if we stall a little bit more, we might even make it pushing up towards the 7,740, which is the 161.8 of this corrective move lower. Perhaps by then, this ascending wedge's resistance is going to be there also. But, you know, as long as I have this, looking very nicely as an ascending wedge, I would be very, very cautious with the NASDAQ eventually, because we've already seen some cracks in the armor of the main stocks that have been driving this, mania move higher. So, I remain skeptical, but, I can't advocate to be bullish. Look at this 50 DMA also riding very nicely lately, this ascending wedge support. So I think we have to be very cautious. I mean, there is still a multi-year uptrend that is holding, right? IWM, the more it consolidates, the more this looks to me like a symmetrical triangle, right? There it is. Likely a bullish interpretation to this as well, unless we break lower from here. But as long as it holds, this might be another continuation formation. Don't forget that we're also holding this ascending channel. So it's quite interesting to monitor. And, we also had this ascending channel. Perhaps it would be a good idea if we extended this previous channel's resistance and see where it goes. Okay, so that's not far away either. So you see, I mean, there is the potential for more upside, but as I said, I have many, many reservations for this move having, a lot of life in front of it. The DAX, the German DAX, actually found resistance in this resistance area, still within a consolidation. But as I've said, for me, the key technical line to watch at the moment is this ascending trend line support, which has been holding. I think that this still has to define the trend, which remains higher. Regardless, I think that only a break above 13,200 will confirm that the DAX also wants to follow and push to new highs. Obviously, as long as the Euro-USD remains weak, that is going to be benefiting somewhat the DAX holding. I know that today, of course, that's not the case, but what I'm simply saying is that, if, for example, Euro-USD was moving higher, then we would have even a weaker day than what we're having so far. So far, it has been a very choppy day. It looks to me that this might be failing, though. I mean, this move higher might be failing. It didn't look impulsive to begin with. So I wouldn't exclude the possibility of another leg lower towards 12,100. Regardless, I think it's quite a choppy chart. I wouldn't really try to trade this yet. FTSE, I was viewing this as a bull flag. Can still be. I mean, we moved above it. We came down. We retested it. It seems to be holding. But what is missing is some kind of an accelerated move higher, because so far the speed with which we have been moving doesn't inspire me that we've seen the beginning of another leg higher after this impulsive move, from the lows to the May highs. So, from a technical perspective, the FTSE looks bullish, but momentum and structure doesn't confirm, in my opinion. So I'm a little bit skeptical here as well. I think that the stock markets this year have been rather tough to trade, because after the mania phase that we had until the end of January, we then had like a big collapse lower. And the market is very skeptical that single leg lower is all we get. And I totally understand that from a technical and psychological perspective. And then we had this steady recovery, which even helped some of the markets pushed to all-time highs territories, but other ones are diverging. But on the other hand, you know, the sentiment and momentum are far away from what they had been since we were hitting new highs at the end of January. So that's why this is what makes trading indices after the end of January a very tricky and very tough endeavor. Okay. Let me see. Oh yeah, two things I wanted to show, which I think are quite important: Euro yen and pound yen. Both of them look quite bearish to me. Euro yen, because I was monitoring this advancement as a corrective formation, because this looks to be like looks like being a pennant. We have broken below it, and we're currently testing some horizontal support. So you know, this is the moment of truth. If we actually break below this as well, I think that's going to be the confirmation that this was a corrective move and we're headed lower. And pound yen, there it is, which actually did exactly what we drew, you know, several weeks ago. I mean, it came back, it retested this broken trend line, it came down, it rebounded a little bit from this ascending. This is a parallel trend line to the one I was talking about. So it tested it, it rebounded from here, and then it tumbled again, and you know, cleared through this line, and is now trying to also clear through this horizontal area of support. I think there is a lot more downside coming for pound yen. At least technically speaking, it looks like it. And obviously, if we get the USD yen finally breaking through this ascending trend line, I think that's also going to help both of them confirm that another leg lower has begun. I mean, euro yen and pound yen, USD yen has to help a little bit. So, you know, the yen component has to help a little bit by seeing some yen strengthening. Okay, so I do think it looks quite heavy, but it's still holding, barely holding this ascending trend line. I think that if it actually breaks below there and it starts producing some follow through, we're finally going to see euro yen and pound yen play out even faster than they have been so far. So I think, you know, this is a general outlook of, you know, what has been getting my attention after coming back. Let me also very briefly show USD NOK, my interpretation that perhaps this was a triangle. We broke out, we came down, we retested it, seems to have been confirmed. So I have to say that despite fundamentally liking it to the downside, I do see that at least it's going to come up and retest this larger formation, if not more than that. I mean, break above it and push higher. And USD SEK held horizontal support perfectly. So, you know, you have to respect the upside as well. Perhaps we're going to see another move higher towards 910. Okay, RSI seems to be in the precipice of breaking higher, which is also going to be a confirmation for the time being, testing resistance. So, you know, just wanted to point to those two as well. Coach, do we have an interview today?
Yes, we do, buddy.
Okay, who do we have today?
Eric Russell. His company is awesomecallstrading.com.
Okay, perfect.
We all like awesome calls, right?
Oh, we all like awesome calls, and
right.
we, you know, who we also like. We like Forest Park effects, and I'm gonna let you talk about them for a minute and then enjoy the interview. It was nice hearing your voice and being back. So I'll see you tomorrow again.
Great to have you back, Steve. So Forest Park FX, everybody, if you're not completely 100% satisfied with your broker and you're interested in the reimbursement program, you get a hold of Forest Park FX. It's right there on our website. Give Justin Trent a call. Also, no law against having more than one account to know where you want to do the majority of your business by having a basis of comparison. If they can help you and it doesn't even help them, they're still going to do it. That's what kind of guys they are. So full-throated endorsement for Justin and Trent at Forest Park FX for finding the best broker for your style of trading. And with that being said, Eric, looking forward to meeting you, and I'm making you the presenter, so be hearing your voice. And if there are any charts you want to show, I know you don't trade a lot of Forex, but you have a great story to tell about your journey. How are you? Waiting to hear your voice. Okay, let me unmute you. Oh, you have, I don't think it shows you muted, so there's a drop-down menu for you to activate your mic. Attendee is self-muted. So there's a drop-down menu for you. Oh no, I don't think so. Hold on. Oh, now I see you. You're self-muted. Can you find the mic setup? You're just self-muted right now. Wow, look at that. Wouldn't want to get bitten by this snake. Scary. So on the go to meeting, there should be a drop-down menu for your mic. Huh. Because it just shows you self-muted.
If you switch to the GoToWebinar application, which is running, there should be a control panel. One of the tabs is called audio. You find that, you open that tab, and then you should see the mic.
Thank you, Stel.
No problem.
Because I got to find out about this red-eyed snake here. Scaring me, man. So we have your screen, so it's just the drop-down on the go to meeting when you came in.
It's not actually on the browser. It's a control panel on the application that launches. So you should find the application within your task manager and then switch to that and then go to the audio tab if you can.
So it looks like, okay, we got you?
No. It's already on. GoToWebinar is already on. You don't need to relaunch it again. I mean, this panel is up. Should be on your right-hand side.
Yeah, the audio drop downs on your right-hand side, Eric.
Click on that. Exactly on the right-hand side should be a panel.
Maybe if you log out and come back in, it might be easier for you. And I think that's what he did. Okay, let's try this again. Okay, made you the presenter.
He's not muted now.
Yeah.
Oh,
Hi, Eric. Eric, how are you? Hello? Heard you for a minute.
There's a chance he can't hear us yet because, you know, there is an introduction message.
Oh,
So give it a few seconds.
Well, it looks like he's searching. And his mic's open.
Yes.
Hi, Eric.
Hello, sir. How are you?
Okay, Eric, how are you? Nice to
I'm
meet
okay.
you.
Sorry, I had a little technical difficulty. My screens went away and I couldn't find them, so I apologize.
Okay, that's okay. It shows the kind of persistence you have, you know. A lot of
Yeah.
people give up. I could tell you don't give up, and, you know, that's really where I want to start is at the beginning of your journey before you were able to make awesome calls. Why don't you tell us how you got into the industry and what it was like to make awful calls for you?
Yeah. Well, yeah. Let me just to clarify. I don't own or run or specifically run it by myself. It was opened by a gentleman by the name of AJ. He's a gentleman who actually founded and started Awesome Calls. I've just been very fortunate to be a part of Awesome Calls for quite some time.
Okay, I see.
It's basically a group of professional traders that are out there to help other traders learn how to be consistently profitable in the market. You know, because for a long time I hated giving money to the market, so now I like to receive money from the market. And I think that's what we all strive for.
Yeah, and we have a common mission, having a community to pay it forward to and help out. So what were you doing before you became a trader?
Well, for the longest time, I've always just been, you know, just a blue-collar construction worker. You know, I started off with my dad. My dad was a carpenter. You know, back in the day, I started working when I was 13 or 14 years old, going, you know, pushing brooms and picking up wood. And then I basically, after that, I moved on to being an electrician for a few years until I found that to be way too dangerous.
Okay, so you were an apprentice electrician. Okay, go ahead.
Yeah. I got into the heating and air conditioning business years and years ago, and I basically just stuck with it. And that's what I did for a very, very long time until I found the stock market.
Okay, how did you find it? Who introduced you to it, and were they your mentor?
No, I really didn't have a mentor per se. I did find, you know, I think what a lot of people find is the penny stock market. For whatever reason, people are drawn to the penny stock market because a lot of people want to start off and don't have a lot of money to start trading with. So the penny stock market does become a little more enticing in a way, and it makes it,
unfortunately,
it makes it a real, realize that you can trade and you don't have to have a $1 million account. So I got drawn into the penny stock market, and I did that. I had some, fairly successful for, I don't know, a couple of years. And then I just kind of, I found out the penny stock market is fairly limited. It's playing small cap stocks. You are very limited on what you can do on a daily basis. And
they're not even small cap. They're micro, beneath micro, right? So
they're micro caps, and you see a lot of these,
pump and dump
services out there, and that's mainly what they do. They're just small cap penny stock traders that trade low float stocks that spike in, back in the day. I wanted to do this for a living, so I wanted to expand my knowledge and my overall knowledge of the market, and that's when I was introduced to AJ in Awesome Calls years back, and I was invited to come in there, and I spent a week in that room, and I basically watched and I learned, and I was completely blown away by the knowledge because it's not just one person. There's a group of professional traders, from option players to specific traders who trade just specific sectors like, bank sector or I'm sorry, the oil sector and specific things. There's options traders. So it's not just one type of trading. There's so much diversity in the room that I actually got into learning how to trade options as well. So, and I kind of moved away from the small cap, micro cap stocks. And what I found is that once I did that, I had tremendous more success going that way.
Okay.
I became, to trade biotech stocks. I trade things, based off earnings. We see like, the SPY's moving in the right direction. We're kind of, kind of give you a little more my background. I am more of a very technical based trader. I'm a very specific in what I trade and how I trade. I use, certain technical indicators. I love Fibonacci as one of my go-to resources.
Okay.
I know a lot of people in the Forex market love the parabolic SAR indicator and some Fibonacci. So I am very technical. I don't just trade randomly. I have a specific system that I developed. It took me years and years of failing forward to
Okay, that's what I want to get to because I went to your Twitter feed.
Okay.
I didn't really check out the website much, but I noticed on your Twitter feed that you had a tweet in there. I don't know if it was pinned or not. That at one time you were $250,000 in the hole, and you didn't give up, and now you you know, have had your epiphany and can make a living off the market. Is that true? And how were you able to maintain the faith to believe that eventually you could come back and master this?
Yeah, so it was, I put a tweet out there the other day. It wasn't the money situation. At one point, 10 years ago, I found myself completely broke. Had no job. I just gotten to the lowest point in my life. I actually had nowhere to live. I was actually homeless, considered homeless at one point.
Wow.
You know, and I just kind of sat there one day and I kind of looked at myself and I go, you know what, you're better than this. You have all the potential. You just got to stop doing the things that aren't working. And from that point, I'm going to decide that day, that moment, that this was going to be the end of where I'm at, right? I didn't grow up super poor. You know, I grew up in a middle-class family. We didn't struggle, but we weren't rich by any means. And what I found myself is that sitting there, basically I was living, you know, a guy hired me to work with him, kind of giving me a chance. And I lived in this metal barn type building, and I had a cot, and that's all I had to my name. I had the clothes on my back and kind of my cot. And I sat there and I thought that I'll never be at this point again in my life. I will never, and it starts right now. And from that point, I made a decision. I told the gentleman, I said, you know what? You've been a blessing in my life. Thank you for the opportunity, but I have to go do bigger and better things. And that's exactly what I did. I went back. I found a job. I took any job that I could do. I got a job being an apartments maintenance guy, you know, just so I could get my foot in the door and start working my way back to the top of where I know I have the possibility and where I should be in life. And it's not, you know, I'm not some great entrepreneur, but I think we all have that ability to be great. We just get complacent in most people get complacent in that, you know, getting by is okay. And I just wanted more out of life, and that's what I did. I went and got a job. I started working my way up. I got promoted, and whenever I got to the point where I didn't, I wasn't happy with what I'm doing, and I wanted more, I went and got more. And eventually I found the stock market, and I said, you know what, I'm going to make a career out of this. When I found stock trading, I knew within the first day, this is what I want to do, and this is what I'm going to do. And whatever it takes to do this is what I'm going to do. And basically, I was still working a full-time job. You know, I'm married with 2 kids.
Okay.
And at the time, they were very small. So my training or studying, as most people say, started at about 9 or 10 o'clock at night after everything was said and done. All the kids were in bed. My training and studying started at 9 o'clock, and we go till 2, 3, 4 in the morning. And then I get a couple hours of sleep, get back up, go to my day job, and come back and do the process all over. Meanwhile, watching the market during the day and kind of watching things in real time. And that's just kind of
Interesting.
where my progression began to grow. And as every day went on, my passion for this got more and more and more. And it's never stopped since then. So every day, you know, every day in the stock market is a brand new great opportunity for everyone.
Yeah, you're learning or earning. Let me ask you this. I do present this question to almost everyone I interview, and you know what you were doing and the way you came back. Congratulations on your Lazarus rising from the ashes. And how many years would you say it took you to have some breakthroughs and be a more consistent trader, that you had the confidence that you could, you know, make money in the markets if you put your focus, attention, and energy into it? How long did it take you?
I would say it took me, you know, I really didn't have any like huge downfalls in the penny stock market. I just wasn't going very fast. And
okay.
I realized that you know, once I made that decision to you know, I wanted to be a, you know, what they call a stock market trader, not just a niche trader. I wanted to be an overall trader. Once I made that decision, that's when it really started, and it took about, I would say, 2 years of.
Okay.
It took about 2 years for me to kind of get to the point where I went full time. And I just went full time trading not too long ago, and I credit all this to my wife, because it got to the point where she would see me every day going to work, and she could see I completely lost the desire and the passion to do that. And she knew this is what I was. She just, one day we were sitting there on a Saturday, and she goes, we just came back from vacation. She goes, "You don't want to go back to work, do you?" And I said, "No, not really." She goes, "Well, do what you want to do, what you were meant to do, and go quit your job." She goes, I'm behind you 100%. Go quit your job." And I thought about it for a couple of hours, and I said, "You know what? I'm going to do exactly that."
Wow,
so
it's always helps.
I quit my job.
The faith of your wife behind you.
Yeah, it was, because when I first started out this, it wasn't like that. I said to her, "I want to be a stock trader." And she was like, "What? Where did that come
crazy.
from?"
That's a gambler.
But
you want to gamble?
Yeah.
Well, how are our
Trust
kids?
me.
How's our family going to have security if you do that?
Yeah, and even what most people find is that when you tell somebody, especially the people who are closest to you, that's where you get the most resistance, because it's not normal. It's not a normal job, right? People think you should get a degree, you go to college, you get a good job, and then that's what you do. If you do anything out of that, well, it's just a little bit too risky and whatever. But life's too short to just do what everybody else is doing, right? Do what you want to do. Do whatever that is, whether it's being the greatest accountant you can be or being the best painter. If that's what drives you, then you've already won. I listened to a gentleman by the name of Gary Vaynerchuk. I'm not sure if you know who that is, or some people.
No, but
some
I
people
agree
not.
with you that money comes and goes, and time is gone forever. It's our most precious currency.
Correct. And what I found myself doing is, being in the heating and air conditioning business in the state of Texas, it's probably the hottest spots on the face of the earth is what I see. But I found myself in extremely long hours, and not, even though I was making very, very good money, I couldn't enjoy that with my family because I was always working. I just basically, I wasn't working for a living. I was living to work, right? And
yeah,
I didn't want to do that. So that's when I put myself together a 2-year plan. I said, you know what? I'm going to take 2 years. I'm going to put all these goals ahead of me. And until every single one of those goals are met, I will not go full time. And I had met that prior to my wife telling me that I should quit. And once that happened, that's where it all kind of transpired from. And
what a great story.
Since then, we've been
you're
in here, and
you're going to give a lot
really
of people hope.
And
a lot of
like
people hope.
Not that I'm something special. It's just I don't know the best way to describe it, but a lot of people say it may be cliche, but you can accomplish anything once you put your mind to it, and that's exactly what it is. It's just about being self-disciplined and having that determination and passion, but you have to find that in whatever it is you're doing. It may not be the stock market. It may be, whatever it is, you want to start a business or whatever it is. You want to open a restaurant. But you just have to have that passion to do it every single day and love it every single day. And that's what I got out of the stock market, because every day is such a new opportunity.
Okay.
And I credit a lot of what I've accomplished in these last couple of years to the professionals and the gentlemen, especially AJ from Off Calls.
I wonder if I know.
These are traders of 30 plus years in the market. And they basically took me under the wing and said, "Hey, look, we've seen," he told me this. He said, "I've seen what you've done." He goes, "I have a lot of respect for what you've accomplished." He goes, "I want to help you achieve your goals of wanting more and being a better trader." And that's exactly what I've become.
Okay, so would the Ttm Squeeze Indicator be something that AJ came up with, and can you talk to us a little bit about how you use that tool?
No, these are like I say, my platform that I use for charting is Thinkorswim. That's who I started with, and I just kind of stuck with them because I'm just one of those trader, out of habit type deals.
Right.
I started using the Ttm Squeeze way back when I was penny stock trading, and what I found is that it didn't really work with the small and micro cap stocks. But once I got into trading mid to large cap stocks, I found that it worked, very decent. I only use a few indicators. I use the parabolic SAR indicator, which is more of a trend indicator, because I am more of a trend trader. I found it easier to just trade with the trend and start trying to guess where things are going and just go with the flow, right?
Right.
So most of my setup
and you mainly day trade because you have a 5-minute
right.
chart up there, 8-minute, and then
for the
on
most
the right
part,
side,
I only trade the first couple of hours in the day, because what I found is I want to trade the most volatile times of the day. Over the course of my progress, I found that I would get chopped up and lose everything that I gained in the morning by trading the afternoon, middle of the day when the volatility is less. So I only trade the first hour and a half to 2.5 hours of the market open, and then I kind of take a break. I go do what I want to do during the day, and I come back, typically, for the close of the day, the last hour. And sometimes I'll trade that depending on if there's, a decent setup for myself, or I'll just watch how things close and set up for the next day.
Okay.
So a lot of what you're seeing here, like the TTM squeeze, I don't usually, it's the gentleman named Carter. He come up.
Use the parabolic SAR? Use it for breakouts or for where a market could go to as potential targets? I'm curious how you use the SAR.
Yeah, so I use that for potential targets. I'm also using, if you can see these here, these are just your standard
Arrows?
pivot points.
Right? Oh, okay. Yeah. All right.
Just standard pivot points. And those have been, the four traders have been using those forever. Because what I found is the pivot points are actually one of the only leading indicators that I found that has really has a lot of consistency, because they are plotted the next day off the previous day's high, low, and close.
They're like magnets.
All these, right. And so what you're looking at is these particular lines of support are plotted off yesterday's price action, right? And they're plotted since the day open. So this is telling me that these levels of support should be, I use these as intraday targets.
Oh, yeah, they're going to take all of those out.
Yeah. So I look at them for, levels, key levels of support. And as we move through these levels of support, the lower you go or the higher they go, the stronger they get. And I found that to be very, very true, just using these over, a period of time. Because I run on multiple time frames.
I have one question. I have one question for you from
sure.
our community. Forget trading. How about some questions? How about some information on how to find a wife like that?
I'm sorry, say it again?
Forget about trading. How do you find a wife like you found? How do you do that, man?
Well,
that was your best long-term trade you ever made.
It is. She was my high school sweetheart. We dated in high school, and we had separated, or not separated, but we kind of lost contact for about 10 years. And about 8 years ago, I found her on, I don't remember how, it was something related to Facebook. I didn't really use Facebook much.
Yeah.
I got on there, I started using it, and it's one of those, here's some people you may know through our relative contacts and through my friends. And I found her, and I got in contact with her.
And you went and closed the deal.
We met again, and from the first day I met her, I told her right then and there, I said, I'll never let you go again. I said, I told you in high school I wanted to marry you, and that's exactly what I'm going to do. I'm never letting you go again.
What a great life story. You need to write a book, buddy. You're right. You need to write a book. So, the way that you, rallied from homelessness to where you are now, to reuniting with your college sweetheart, and, doing what you love to do. I just, it's a great story. It's very inspiring because a lot of people go through what you go through. Maybe not, it's all a matter of degrees, but you have a great spirit, of belief and faith. Does it have anything to do with just your moral code or anything in the invisible world that gives you strength like that?
Well, a lot of it comes over the last year. My father passed away unexpectedly a year ago, in January. And, he was always my biggest supporter growing up. So That had a lot to do with it because my dad's work ethic. That's where I got my work ethic.
Okay.
And drive from my father. He was never one to quit and give up, no matter how tough or things got. Because there were periods in my life growing up that we had to move around a little bit.
Yeah.
Because he was a construction worker. He was a carpenter, and he was great at what he did. But the construction industry is not always the most consistent. So seeing him,
recessions would suffer. It was like boom or bust kind of a business,
right?
Wasn't it? Yeah,
right. And that's kind of why I got out of that business, because I knew that I wanted to do something, in my life. I just didn't. It was the greatest compliment. I didn't really want to. I wanted to be like my father, but I didn't want to wind up like my father, be in his situation, because he always gave me and my brother the things that we wanted, but he had to make a lot of sacrifices and do a lot of these things that I'm not the only one that he had to get a lot of sacrifice and not give himself much, and I wanted to kind of have it better for my children, and there for a long time I didn't even expect to ever have children because I was never in a place or a position that I thought I should bring children into this world and put them in a bad situation. But then again, there goes my wife. She brought me belief in myself. She kind of picked me back up, and she's always been my biggest supporter. Her along with my father. And when my father passed away, I know it sounds a little dumb, but I talk to my dad every day. I told him, I tell him that I'm doing exactly what you told me to do. That I said I'm never giving up. And one of the biggest things I accomplished in my life was actually buying a house. I bought a house a few years ago, and I'll never forget when he came over. He said, "You've done exactly what you wanted to do, son, and I knew you would." And from that moment, I keep that with me, and that's what drives me every single day, is knowing that he may not be physically with me, but I can still have that every single day to share with him.
You know what, Eric? It's an honor to meet you. Thank you for being an open book and wearing your heart on your sleeve and telling your story. And I think a story like this is more helpful than any kind of indicator or a market forecast or even a good trade, because you're a real life example of being able to rally, and you've learned the secret to trading. It's perseverance, discipline, and living through adversity. And you're now my trading warrior brother, Eric, and glad I reached out to you on Twitter. And my forecast was correct. You would be great.
Well, thank you.
It was a great interview. It was a great interview, buddy. I really appreciate your time and wish you continued success, and I'm sure you'll have it. You sound greatly blessed.
Well, I appreciate it very much, and like I say, thank you for giving me the time to share my story. I don't share it with many people, but I thought that this was a great chance to kind of
this has been a helpful
other traders, because I've been through where everybody, if anybody's listening to this, I've been exactly where you're at, and not that I'm some wonderful trader, but as long as you stay with it, as long as you stay passionate about this, we always say we don't lose, we learn, right? There's no losers, there's learners. So as long as you keep that in mind and you keep failing forward, then I think it'll be just fine.
Okay, so you could find Eric at Art Trading, ARTRADING 125 on Twitter, and you could find him most likely in the trading room at awesomecalls.com. Is that correct, buddy?
Correct. That's correct. Right. Yeah, it's awesome.
All right, Eric.
Awesome calls. Yeah, awesomecallstrading.com. I trade in there live every day. Like I say, I'm in there.
Okay.
I'm always open for. My DM on Twitter is always open, so anybody with questions or concerns, I'm always available to answer any questions that you guys have.
Thank you, Eric. Good hunting this week and throughout the rest of the year. It was really a pleasure meeting you. Thank you.
Thank you. It's been a pleasure for me as well, sir. I very much appreciate it.
Okay. Sandrine saying, Eric, you need to write a book, so they agree with me. All right, well, Face.
I can barely read. I barely have the patience to read a book, let alone write it. But I'll continue to tell my story.
All right, buddy. So, Face, that's it. Thank you, Eric. You know where to find him, and we'll see everyone for Turnaround Tuesday. Good hunting. Adios. Thanks again, Eric.
Thank you, sir. Have a good day.